Hey, this is Matt from InvestiQuant. Today is Tuesday, November 30, 2021. This morning we saw a pretty choppy open following the gap down on this last trading day of the month. The markets made an attempt to go higher, and then some comments about inflation got the market spooked, and we have been selling ever since. We've got a lot of selling taking place. We've got a giant range, already 82 points of range in the S&P here about midway through the session. And what we'll be looking at this afternoon is a follow-up on the study from this morning on the last trading day of the month with a gap down in a similar market environment. I'm going to use that same study, and I'm going to add to it that we are seeing some selling taking place. So it did kind of suggest that. So let's see what happens when it is playing out. So I'm going to go here with a 3 o'clock entry set up as a long. I'm going to go ahead and add the opening filter, which was gap down. In the post-open filters library, I'm going to say that we are trading below the prior session close. So to do that, intraday close versus daily levels, I'm going to go down just a little bit, and I'm going to hit equals next to below prior close. There we go. So this would mean the 3 o'clock price, that's the time of entry I've got set here, is below yesterday's closing price. That looks pretty likely at this point. Next, I'm going to go into the indicators library. I'm going to put us in a similar market environment, below a 10 but above a 200-day simple moving average. And then from the calendar library, I'm going to select that it is the last trading day of the month. So that gets me everything that I need. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when it is the last trading day of the month in a weak bull market environment. You gap down at the open, and at 3 o'clock, you are trading below the prior session closing price. So because this is a specific day that we're looking at in a scenario of a weak bull market, we don't have as many samples here. We've got 17 in the S&P dating back to 2003. For the NASDAQ, it is 18 samples, 24 in the Dow, 7 in the Russell. Very rare there. The win rates on these generally weak. We're seeing the S&P come in at 29% of those closing above that 3 p.m. price. For the NASDAQ, it's 22%. For the Dow, 54%. For the Russell, 29%. Now, those are some really weak win rates. Keep in mind the sample sizes are smaller there, but they're generally in agreement. If we look at the average moves, looks like the average win is larger than the average loss for the S&P. A win there would be moving higher from that 3 p.m. price. That is also the case for the NASDAQ and for the Dow. The Russell's pretty similar in size. So historically speaking, it looks like the bigger moves took place on the upside, but they were not nearly as frequent as the moves that continued lower from that point on. So hopefully you found that helpful. Good luck today, and we will see you.